man.
Thank you, Sean. I appreciate it. It's 5 minutes after the hour. 6. Excuse me, 8. I'm all messed up right now. I don't know why. All right, Joe Courtney is here with us in the studio. I appreciate him taking time out. We've got him for another hour. So here's how it's going to work. I'm going to go through a couple of issues with Joe, and you guys can get in line if you want to start calling. 860-442 WXLM 860-442-9956. And I also have a number of email questions to pass along to you, Joe, as we move forward. But let's go with the debt ceiling first. How much higher can we press this thing before we've reached that actual debt limit and we don't start backing up and crumbling down? I mean, are we at that limit now?
No, actually, I don't think we are. But on the other hand, that doesn't mean it's not where we should go. I mean, we should, as a nation, just as we were in the late 1990s and early 2000, be at a point where we're actually starting to pay down debt as opposed to growing debt. And I think, again, it's historically people, it's helpful to remember that we were in 2001 at a place where we were actually buying back American debt. Alan Greenspan at the time was worried that we were doing it too fast, which is kind of a quaint historical memory at this point. But anytime you're in a situation where there is borrowing, Treasury, the U.S. Treasury needs to get authority from Congress to go out and sell T-notes, whether they're 10-year notes, 30-year notes, or even shorter-term notes, to go out and engage in those auctions. If you go back in time in terms of when we've had deficits, under President Reagan, the debt limit was raised 18 times. Under George Herbert Walker Bush 4 times, under Bill Clinton 8 times, George G.W. Bush 7 times, and President Obama has had 3 increases since he's been president. And the generally speaking, these votes, which I think you and I talked about this one time when I called in, have not really generated the kind of attention that the exercise that we just went through, and they were what they were called clean votes in terms of there were no conditions attached when they were raised during those time periods. I actually quoted from President Reagan on the floor of the House, which if you go to my website, you can actually see the clip where I talked about his argument about why back in the 1980s we should do it. So this time, obviously, the new majority said we want to attach some conditions to raising the debt limit. I am a little uncomfortable with that because I think it creates a precedent which future presidents are going to have to sort of be confronted with, and the markets get nervous if it's seen that the country is maybe getting a little unsure about whether or not it's going to in fact pay its bills, because that's what this money goes for.
Sure.
And but having said that, I voted for the final package. It was a compromise. There were about 90 Democrats who crossed the aisle to support the final package. It calls for $1 trillion in spending cuts up front, and then an additional 1.5 that's going to be determined by the Deficit Commission. They've got their work cut out for them. There's a sword hanging over them, what they call sequestration or automatic trigger for cuts across the board of 2% if it doesn't go through. And they are now fully appointed, and they're going to begin their work, and they have to report back really in about 6 to 7 weeks with a package for Congress. Otherwise, that sequestration order, that trigger, goes into effect.
So you don't see this then, and I try to simplify it for everybody out there listening. You don't really see it then as a family, people who have an income and they have debts and they have bills to pay. You don't really see it like that if in fact, you don't really see a limit to as far as we can extend the debt limit.
No, I mean, I actually do, but okay. I remember businesses borrow money, families borrow money. I have a mortgage on my house,
right.
And if I, am starting to run into some tight budgeting, I mean, I don't get to basically get up and say, well, I'm not going to pay that anymore, and I get to keep my house. I mean, the fact of the matter is, if you look at what the Treasury Department was saying in July and August, is that we basically are taking in about 60% of the obligations that we presently have right now, whether it's Social Security, paying for the wars, paying for our military, Veterans Administration, et cetera, and that at some point, if we don't get some lending or borrowing authority, that there's going to be some hard choices about who gets paid their Social Security checks. What's interesting is that if you look at what's happened even after the S&P decision, which I'm sure we can talk about this morning, the bond investors over the last week and 2 or 3 days have not moved away from Treasury notes. I mean, the demand for T-notes, in fact, went up last week, and the yield rate that the government is paying, or the interest rate that the government's paying to sell those notes, is actually going down, which means, in other words, the cost of that of those bonds is actually, in a historical perspective, lower than normal, because the U.S. is still considered a safe investment. I mean, Warren Buffett, when he said it's a quadruple star investment after S&P, the fact is that the market voted with its feet last week in terms of T-notes. Now, I mean, obviously the stock market, which is a separate area, had a pretty scary week up and down. But I think if you look at really what was driving those forces, a lot of that was Europe, and certainly people's fear that we're on the verge of going into a double dip recession, which is really where I think the focus really should be right now, about making sure that we keep this economy growing.
Well, didn't the S&P downgrade, though, have a lot to do with spending? And do you ever see us curtailing the spending? Because it seems as though there are people out there, and a large part of the country wants to say, hey, wait a second, we got to do something about what we spend our money on. There's so much waste and so much nonsense that our tax dollars go to.
I mean, the answer is yes, there is waste. I'm on the Armed Services Subcommittee on financial reform and auditability reform, which is taking a look at the fact that the Pentagon, which is supposed to have had an auditable set of books since 1995, still has never been able to do that. We had another outrageous story of the Army paying Boeing something like $1,700 per part for helicopter parts that are worth closer to like $15.
How does that happen, Joe?
Well, that's the problem with having an agency that's not transparent. Right. Is that, and this really only was uncovered because of whistleblower laws and the Inspector General, which is a very sort of random way of just, uncovering these kinds of wasteful situations. Having an auditable set of books, which every other agency of government gives you a system in place where you can actually see what's going on there. And this is a bipartisan committee. I'm really it's pretty boring stuff, sitting around there with comptrollers and auditors talking about the challenges. The Marines, by the way, are going to be the first branch to come forward with an auditable budget. They established the beachhead.
Right.
They're the smallest of the branches, but the fact of the matter is that's an example of where we really have got to change our ways and do things. And it also applies to domestic spending as well. Having said that, if you read the S&P report closely, they commented on a number of things. Number one was that they were nervous about whether or not people understand that the government has to stand behind its obligations. And there was a report in Politico on August 11th, which basically said that, they were concerned about the fact that there were people in the political arena that were even talking about a potential default. I mean, that is very reckless kind of talk for members of Congress, and frankly, one of them is running for president. I mean, Michelle Bachmann, who voted no on the final package, said it didn't matter if we went into a default. And in my opinion, that's very dangerous for the markets. And S&P specifically commented on that. I mean, yes, we need spending reform, and frankly, they also included looking at the Bush tax cuts in their critique. Again, I would encourage people to read the S&P report, which I've done a number of times, and it's a combination of things. What they are looking for is deficit reduction, and that, like any other deficit reduction package under President Reagan or the two Bushes, included a combination of both revenue and spending reductions.
All right, now, when you say revenue, I obviously that means taxes for everybody out there. How can you actually ask a lot of the people out there, 51% of the Americans pay all the taxes. Everybody else doesn't really pay anything. How can we get to a fair footing? I mean, can we ever get to a fair footing?
But let's talk about revenue, also a little bit globally, in terms of the fact that there is, in my opinion, wasteful tax expenditures out there. Ethanol tax credits, which is $7 billion a year, is going to an industry that today already enjoys a mandate in terms of their product being used in gasoline. You see it in every time you go to the gas station. Why should they have a tax credit? I mean, you go out and talk to farmers in eastern Connecticut, they get apoplectic about the fact that their feed costs are being driven up by the fact that, we have a tax credit that just inflates the price of corn.
Right.
And for a product that, if it ever did need it, is matured to the point where it doesn't. Oil companies, George Bush said that anytime in this, the last George Bush said, anytime the price of oil gets to $60 a barrel, there is no justification for giving tax incentives for exploration and production of oil. And I think that is an area where, why would you continue to give tax breaks to an industry that is enjoying a price that should easily incentivize? So again, there's a whole host of those. Hedge funds get taxed at capital gains tax rates when their secretaries pay 25%. I mean, that's ridiculous. It's not their money they're investing. That's ordinary income. So there are tax loopholes that should be closed that will increase revenue. Now, in terms of taxpayers in general, Warren Buffett yesterday had a big story that was reported all over the news about the fact that he thinks that the top 1% is being coddled with the tax code, and that, you can, I think, very moderately adjust rates to bring in revenue from a sector of America that, frankly, as Warren Buffett said, can easily pay more.
Yeah, but even even if you were to get the 1% to a better tax bracket, according to the reports I read, it really wouldn't make much of a big difference in us attacking the deficit. Can we get to a point, and I don't know, I know this is probably a pipe dream, and I doubt it's even discussed on the floor, but is there ever going to be a time where we can discuss a flat tax for everybody and everybody pays their fair share? If you make $20,000, you pay $2,000. If you make $20 million, you pay $2 million. Can we ever get there, or is that impossible?
Well, I think certainly tax reform is something that the system needs. It's been since 1986, since the system got cleaned out.
Right.
The question is, though, is whether or not the Deficit Commission, in the short space of time that it has, of literally 7 or 8 weeks, is going to be able to go in and revamp the entire U.S. tax code as part of a deficit package. What we're really talking about here, in my opinion, in terms of the mission of the commission, is to really try and get a package done so that we're into 2013 and we don't have these automatic trigger cuts that would affect defense spending and could really impact even our region here. And frankly, the issue of tax reform is something that, again, historically, if you look at how it was done under the Reagan administration, it was done under a bipartisan. Dan Rostenkowski, Democrat from Illinois, helped sort of contribute to that. But that did not happen in a month and a half.
All right, it's 17:18 now after the hour of 8 o'clock. We'll turn it over to a couple of phone calls in just a couple of minutes. We got to take a quick break. We've got Joe Courtney here. We've got him to the top of the hour. 860-442-WXLM, 860-442-9956. We'll come back. We'll answer a couple of email questions. We'll answer a couple of phone calls. I've got a number of other questions to pose to Joe. You can get on the list and give us a call, 860-442-WXLM. Before we go any further, here's Sean with a look at the headline.